Hello, hello, YouTube family. What is up? It is your favorite entrepreneur here, Sierra Nicole. I know it's a little bit late. If you guys are watching this live, you guys are catching a replay. Welcome. If you guys have not subscribed to my channel yet, make sure you guys do so. I'm all about entrepreneurship, business, ownership, leverage, right? Credit, business credit, personal credit, how to build wealth, how to build a business, right? That's what we're all about here on my channel. So if you have not subscribed yet, make sure you do so now. Awesome. I see some people hopping in. You guys, please let me know in the comments if you can hear me okay. Let me know in the comments if you guys can hear me. I am testing out this mic. I don't want another mishap like that had happened before a couple months ago. I had a mishap with the mic live on YouTube. So I want to make sure that you guys can hear me before I get into today's content. We're going to talk about leverage. Awesome. Love it. Love it. Yeah. So today we are going to talk a little bit about leverage, right? And what is leverage? Leverage is using something to its maximum advantage. That is what leverage means. And leverage is extremely important when it comes to, especially when it comes to building a business. Now, I know most people on my channel are entrepreneurs or business owners or aspiring ones. So it's really important that we understand leverage and why it's so important and why we have to stop trying to do everything with our own cash. Okay, we have to stop doing everything with our own money. It's going to take you 10 times longer to build your empire when you're just trying to operate off of your own money. We have to start moving like these large corporations. If you look at Walmart, most of their products are purchased on corporate credit lines. And when you go into Walmart and you go and buy something, then they go and pay that credit line back, right? So that's just the way of the world that we live in. And it's an amazing tool to help you to be able to grow your business a lot faster and build wealth a lot quicker. So if you are familiar with Robert Kiyosaki, if not, I definitely recommend that you go and grab his book, Rich Dad, Poor Dad. It was definitely a game changer for me in the very beginning stages of this pursuit of, trying to build wealth and gain financial freedom. So it's definitely a really good book that you guys can check out. But in that book, he talks about the difference between good debt and bad debt. Okay, there's a difference between good debt and bad debt. Bad debt is going to be debt that does not bring you any cash flow, that does not bring you any income, does not bring you a positive return, right? So things like bad debt, so like spending your credit cards on clothes and shoes and things like that, if it's not going to bring a return, it's considered bad debt. Good debt is debt spent on assets, debt spent on things that are going to bring you monthly cash flow or some type of return. That is good debt. And so our goal is to accumulate more good debt so that we can increase our cash flow. Okay. So that we can increase it, because unless you inherited a ton of money or you come from a family of wealth, I know that I don't. I don't know if some of you guys are watching and maybe you guys can relate, but maybe you are that, that pioneer in your family. Maybe you're trying to be the first millionaire in your family. I'm sure there's a lot of people watching this video who can relate to that, right? So we didn't have a ton of money passed down to us, a ton of cash just, stacked up or trust fund for us. So it's going to take a lot longer to be able to accumulate, for example, let's say accumulate $100,000. It's going to take a lot longer to work for that money and to save up that amount of money versus you leveraging and using OPM, which is other people's money. It's going to be much quicker for you to be able to accumulate someone else's money versus you working hard, working overtime, getting side hustles and trying to save up $100,000. Now, say you do, accumulate or save up that 100 grand, right? And say you're trying to get into real estate. You go and try to purchase a property for, one property, you want to pay it out in cash, right? Go and buy a property for 100,000. Say that property brings you in $1,000 a month. Okay. That's great. You have one property, you have one source of cash flow. Now, on the other side, Say you have $100,000, but now you want to go and buy property, but now you're going to leverage. So now you can go take out loans and say you put down a $10,000 deposit. Now you can put down 10 $10,000 deposits. That's 10 different properties. Say each property brings you in, I don't know, $1,000 each, just like the first example. Say each one. So that's $10,000 and say, okay, now you have to pay a mortgage on it, right? Because you leveraged and you took out a loan for each property. Even if you had to pay a mortgage of, I don't know, $500, that's still going to bring you $5,000 in cash flow versus the $1,000. Hopefully I did my math right. You guys got to correct me. I dropped out of college, so I'm not very good at math. But either way, that's going to bring you more cash flow than just using cash, buying a property outright, and depending on that. So leverage is going to be an extremely important aspect to you building wealth. Now let's talk about it on the business aspect, because some of you may not be interested into real estate, but maybe you want to be a business owner, or maybe you are a business owner. Most of my experience as a business owner has come from operating a trucking company. Now, if you know anything about the trucking industry, you'll know that this is a very expensive industry to be in. And a majority of small business owners who are in the trucking space do not last very long because the maintenance is extremely high, extremely unpredictable. There are so many variables that are going to affect whether you are bringing in money that week or not. I learned the power of leveraging credit because we were trying to use our own money, our own cash flow. When the trucks are bringing money that same week almost, we have to go and spend that on maintenance. So our cash flow was terrible. Being able to leverage credit, whether that's your personal credit or your business credit, is going to be a game changer for you, because now you can use OPM, use someone else's money, the bank's money, a lender's money, use their money to do what you have to do to grow and scale your business. You're going to be able to scale so much easier and faster. If you're using all your money on, like, for example, with the trucking industry, if we use all of our money to fix trucks and do maintenance, and you have to pay payroll and you have to pay insurance and all these things that you're paying out, where is the money going to be left for you to grow and scale, right? There's none. It's going to take 10 times as long. But say you go and leverage your personal credit, leverage your business credit, and go and get a $10,000 credit line or a $10,000 credit card or a loan. Now you can take that and use that to, I don't know, buy another truck or lease another truck or lease 2 more trucks. Now you're increasing that cash flow. So it's extremely important that we understand leverage. And as business owners, you need both personal credit and business credit. I talk a lot about business credit on my page, but you guys, business credit is not an alternative to personal credit. It's so important that we have both, because now you're double fundable. Now you can get credit on the personal side and you can get credit lines on the business side. Business credit is awesome because, usually the lines are going to be about 10 times as high from the personal side. But even if you can get 10 grand or 20 grand on your personal side and get, 50 grand or 70 grand on the business side, you're going to win either way. So it's really important that you are taking care and building both personal credit and building your business credit. I'll say this again. Business credit is not an alternative to personal credit. Now you can build business credit completely separate from your personal credit, but you need both. Okay. You need both, especially as your business grows and you want to start getting those larger lines of credit or larger loans for your business. That type of funding is always going to require some type of PG, meaning a personal guarantor. So basically you co-signing for your business. Okay, that means you're co-signing for your business, but that's going to require you to have good personal credit as well. Those are going to be the big loans. Unless your business is bringing in some crazy cash flow, like over $1 million a year or a year. If you're bringing in crazy cash flow, then you may be able to get away with being able to access certain money without leveraging your personal credit, but you're going to have to leverage personal credit, especially if you're in the startup phase. Okay, in business and in lending, if you have a business that is under 2 years old, you're considered a startup. So within those first 2 years, you're going to have to leverage your personal credit in some aspects for sure. Okay. So it's really important that as business owners, we understand leverage and we understand the importance of building both personal credit and business credit. Now, with personal credit, there are some different things that you can do to build it. Unfortunately, especially within a lot of different communities that don't really get access to financial literacy. I know that I really did not know about credit until I already messed up my credit. I was in college and I didn't really know what I was doing, right? I'm sure a lot of you guys can relate to that too. And so building up your personal credit is really important. So there are several different factors that play a role in personal credit, right? You have your credit mix, you have your credit age, you have the type of credit lines, so like whether it's revolving or whether you have term loans or you have a mortgage, things like that. The age of your credit lines, the utilization of your credit lines, meaning if you have a $10,000 credit card and you use $5,000, that's a 50% utilization rate. On your personal credit, you want to make sure that you are staying, I always say below, 10% and under when it comes to that utilization. That's going to be extremely important. You want to stay under that 10%, but you don't want to be at zero. I don't believe you should be at zero with utilization because you want to show the banks that you are using your credit. Banks make money when we take out credit, right? Because now we have to pay interest. Now we have to do all these things for them. So they like when you use your credit. And so you want to make sure that you're showing activity on your credit cards, but pay it down to 10% before the statement date. I hope you guys caught that, before the statement date. Sometimes we'll pay on the due date, but sometimes the due date is after the statement date. So for example, say you have a $10,000 credit card. Say every month you use $5,000 off of that card, right? But you want to pay it down before it reports again to your credit report, because if it reports at 50%, your score is going to tank a little bit. But a lot of times, a lot of people will try to pay on that due date. You need to pay attention to what day are they giving you your credit card statement. What day are they in? The day that they give you your credit card statement is the day that they actually report to the credit bureaus. So you want to make sure that you are paying before the statement date, because like I said, oftentimes those dates are going to be different. If the statement date is before the due date, you could end up having your credit card being reported at 50%, but you won't have any late payments, but that utilization will rise. Okay, so you want to make sure that you're paying attention to the statement date of your personal credit lines and you're paying that down. You want to, like I said, you want to stay in that 10% or less range. I don't really recommend zero, just to be able to really maximize the points on your credit, but you definitely want to keep it below 10%. Another thing that you can do, if you know that you're about to make a big purchase, if you know that you're about to apply for some credit, something that you can do is actually be an authorized user on someone else's credit line. So if you have a family member, if you have a friend, a grandparent who has good credit and who has a credit card that is pretty old, like an old credit card, meaning they've had it for many, many years, that age can really help your business credit. Your personal credit report. That age is going to help your personal credit report. So you can be an authorized user, meaning they'll put you on the card. You don't necessarily have to get like a credit card. They can keep the credit card, but their history will report to your personal credit report. So this can actually boost up your credit score for multiple reasons. One, they're going to be aging your report, right? So it might be, say it's like a 10-year-old credit card. That's going to add points because that age, it's really important to have that age on your credit report. Also, the good payment history. You want to make sure that they have positive payment history. You don't want any late payments, because as soon as that reports to your credit, those negative payment history, that's going to show up on your credit report. Okay, so you want to make sure that they have good, clean credit payment history. But that payment history is going to help boost your score as well. Okay, so being an authorized user is one way to do that, and it's not a permanent fix. but it definitely helps if you are planning on, applying for a loan, applying for a line of credit, or trying to make a big purchase like a vehicle or something of that nature. Now, if you don't know anybody with good credit, if you don't have a family member, a cousin, a grandpa, a parent, right, who can give you access to a line like this, you can actually purchase trade lines. But when you do this, you want to make sure that you do go to a credible source. You want to make sure that they have reviews. You want to make sure that they're actually going to report this trade line. But that is an option that you have. Like I said, it's not a permanent fix whatsoever. It's temporary, typically for only 30, 60, or 90 days. And that's only when you're about to do something big, like get a loan, get a line of credit, purchase a car, lease a car, things like that. There are also some other options for building up your personal credit, like self-lender. Self-lender is a pretty good one, or kickoff. Basically, how that works is like with self, they have a couple different payment plans. I think I've done it before. I think I paid like $12 a month. So what they do is it's basically like you're paying back a loan. So they put on your credit that you have a loan from them. You pay them a few dollars, like $12 or $20 a month. At the end of 12 months, they actually give you your money back. But it's going to look like you paid off this loan. It's going to build up positive payment history. It's going to build up your credit profile overall, add a little bit of age to that as well as the years go on. So that's another way that you can start building up your personal credit. Now let's talk a little bit about business credit. If you guys are watching this live right now, or even if you're catching a replay later, go ahead and put leverage down in the comment section. Put leverage down in the comment section. We're going to talk a little bit about business credit next. I want to see you guys put leverage down in the comment section. And if you guys are just now hopping in the live stream, we're talking about leverage, okay? We're talking about ways to get money so that you can build wealth, so that you can grow your business at a much faster rate. Leverage is so, so important. Now, with business credit can be built completely separate from your personal credit. Now, I said this earlier in the video, but I will repeat this again. Business credit is not an alternative to personal credit. You need both, okay? Don't let anyone fool you, okay? It's not an alternative. You need both. But let's talk a little bit about business credit. Now, business credit can be built separate from your personal credit. And that's really important because as a business owner, the goal should be to become a true CEO, right? So you don't want to have your business solely dependent on you, okay? So that's why your business needs to have its own business profile and its own business credit profile. Another reason is you want to protect your personal assets. You want to protect your personal credit. You don't want a business credit card or a credit line that's used on your business, especially as you grow and scale. Like I said, in those first 2 years, you're going to have to leverage your personal credit for your business for those first 2 years. But as you grow and as you scale, you want to get out of that. So you don't want your business, 5 years down the line, you don't want your business impacting your personal credit, because if you get a credit card and you're using that for your business, say you have a $10,000 credit card, right? But it's in your personal name. You can't really utilize the whole card without negatively impacting your personal credit. Now, business credit is major because utilization does not play the same role or effect on your business credit report. So you can get a credit line solely with your business credit, and it'll report to your business credit and not your personal credit. And you can use the entire $10,000 line. You don't have to worry about that 10% or that 30% utilization rate affecting your score. That's huge, okay? That is huge. Business credit is awesome because the business credit lines are typically, can be up to like 10 times the amount of a personal line. So say you go to a bank. You go to the bank with your personal information and you go with your business information with a strong, built up business credit profile, good revenue and everything. On the personal side, they may be only willing to give you $10,000 because, it's a personal credit line. On the business side, they may be willing to give you $100,000 because it's a business. And the purpose of a business is to what? make money, make revenue, make profit, right? So they're willing to give a business more because they feel like there's a higher chance that they'll be able to get that money back. So the type of lines that you can have access to are so much larger on the business side. Okay, so much larger on the business side, which is why it's really important that you start building up your business credit. I get the question asked all the time, well, I'm just a brand new business. Like, when can I start building business credit? Today. You can start building business credit day one of your business. Day one. Like I said, it's going to be a little bit harder for you to get access to the really large lines of credit those first 2 years. But imagine spending 2 years building up a credit profile for your business. After that 2-year mark, you're going to be really hitting the ground running and really getting access to some money. Okay, so it's really important that you start that as soon as possible. I actually have the link in my bio. I saw someone in the comments that they signed up for Nav. Nav is awesome. Okay, and the link to that is in the description box of this video. So nav.com is a resource where you can actually access your business credit reports. There are 3 main business credit bureaus: Dun & Bradstreet, Experian Business, and Equifax Business. Now, there are some other small ones, but those are really the main ones right now that banks are, really utilizing. Nav is great because not only do you get to access all 3 of those business credit scores, if you sign up for their Business Boost program, it's about $40 a month. They will actually report your payments to your business credit. Okay, they will report those payments to your business credit, and they will start to build up that positive payment history. Guys, that's huge. That's probably one of the easiest business credit lines that you can add to your report. So the link to that is down below in the description box. Business credit is pretty dynamic, and it definitely takes time to build up. It doesn't take as long as building up your personal credit. Your personal credit is something that's going to take you years to build up, because the older your accounts are, the stronger your report and your score is going to be. I talked about earlier before, adding trade lines and things like that, but having your primary lines age, that's going to take time. With business credit, it doesn't take as long because the age of your accounts, they don't weigh as heavily as they do on personal credit. So building up your business credit, it is a little bit of a quicker process. Now, they have been making some changes though. So they've been making it a little bit harder. Before, maybe like a year ago or so, you could go and get a Net 30 account and it'll report on your account within 30 days. That's not really the case anymore. So you guys have to keep that in mind and be patient. A lot of these vendors are taking, 60 to 90 days just to report your payments, these Net 30 vendors. And that first stage of building business credit is going to be the longest, because you have to wait that either 30, 60, 90 days for them to actually report. So they have been making some of those changes. But like I said, you have to be patient through this process and really see it as an investment, and just know that it's going to end up paying off. So it's really important, really important, to be able to build up your personal credit and to be able to build up your business credit because of leverage. I gave you guys some examples earlier in the video why leverage is so important and why it's so pivotal. And it's really a game changer for your business. It's really a game changer. If you build up good business credit, you can get vehicles in your business name. That dream vehicle that you want, you can get that in your business name, right? So there are so many different benefits to having good business credit, and there are so many good benefits to having good personal credit, but you need both. Okay, you need both because you want to accumulate good debt, right? We don't want to accumulate too much bad debt. We want good debt that's going to increase our cash flow, increase our business, increase our assets and our investments, right? Money that we can use to make more money. You want to use other people's money to make more money. Because like I talked about earlier in the video, it can take you 10 years to save up $100,000 for you to work hard, get 2 different jobs, get 5 different side hustles, right? Deprive yourself of the things that you like to save up money. It could take you 5 years to save up $100,000 cash. Or you can spend a good year or so, a year or 2, build up your personal credit, build up your business credit, and get access to $100,000 so that you can grow your business, right? So that you can grow your business, create more cash flow, buy some real estate, create more cash flow from that, right? And start living the life that you live. right? That life of luxury, or, whether that's spending more time with your family or with your kids or traveling the world, right? You don't want to wait 5 or 10 years. I know I don't want to wait 5 or 10 years. I definitely don't want to wait 5 or 10 years. I'm sure you don't want to wait 5 or 10 years either. This takes time, but doesn't have to take as long as you think if you can leverage properly. And you can use OPM, other people's money, and really play this system, because we live in it's a system that we live in. And you have to learn how to play the game. These big corporations, they're playing this game, right? Why can't you play the same game as them? We have a question in the comments. When is a good time to ask a creditor for increase on your business credit? I would say typically lenders are probably, about 90 days or so. 90 days, you can typically ask for an increase after about 90 days. But you want to make sure. So the thing with business credit, I said before, it's like an investment, because the more that you spend, the more that you'll have access to. They like when you spend money, okay? Because when you spend money on your credit lines, they make money. They like that. So if they see that you're spending money, they'll want to give you more money. So if you have a business credit card or a business credit line, don't just let the money sit there. Utilize that money, because if you don't use it and you go and ask for more, the bank is going to say, well, you don't even use the money that you have now. The credit line that we gave you, you don't use it. Why will we give you more? We can go and allocate this towards a business that actually is going to use it and actually that we can make money from. So you want to make sure that you are utilizing your lines of credit. The more that you use, the more that you spend, the higher amount of lines that you'll get. Okay, so it's really important to remember. So if your goal is to get $100,000 line with your business, you need to make sure that you're spending, some money, probably a few thousand or more than that, in a month. You want to make sure that you're spending. So the more that your business grows, your business credit is going to grow along with that. Okay, because as you grow, as you expand, as you start to make more money in your business, your expenses are going to get a little bit higher. Start putting that on your credit line so that you can show some activity. And like I said, the good thing about business credit, like the true business credit that does not report to personal credit and only reports to business credit, that utilization doesn't really affect you the way it does on personal credit. So if you have a $10,000 card, you can use that $10,000. Versus on the personal side, you can only use, 10 to 30% of that before it really starts to negatively impact your personal credit score. All right, so that's really, really important. So you guys, that's all I have for you guys tonight. If you are interested in really learning how to build up your business credit, the link down below for my masterclass is in the description box. It's a 2-hour masterclass, and I dive deep into the process of building up your business credit. So if you want to check that out, I also have the replay of my Money Talks virtual summit. For Money Talks virtual summit, it's all about getting money for your business. So we had an expert come and speak about personal credit. We had someone come and speak about government contracts. I talked about business credit. My business partner talked about getting loans and funding and financing. So if you're interested in that, the link is in the description box as well. Mandy has a question. If you are freshly in starting your business, how soon would you say to buy things with that business account? So if you're talking about business credit, so you can start building business credit day one. Okay, day one. So you're going to start building business credit using Net 30 accounts because you are a new, fresh business. Net 30 is where you're going to start off. Okay, but you can start day one, and you're going to work your way up and build your way up to the different types of credit, like retail credit lines, retail credit cards, gas cards, revolving credit lines, cash credit. Okay, you're going to work your way up to that, but that's where you're going to want to start. And nav.com, Mandy, is going to be a really good resource for you as a new business. So the link for that is in my description box down below as well. All right, y'all. My YouTube family, I love you guys. Any additional questions, throw them down in the comments. If you guys have any topics that you ever want me to come and talk about and teach about, throw them down in the comments as well, and I'll make sure I get some videos done on them. My goal with my channel, and if you know me, any content that I put out is all about helping you all, helping anybody who wants to be an entrepreneur or they are a current entrepreneur and are looking to expand their income, expand their wealth, expand their money. Okay, Alex says, is a masterclass good for a sole proprietor? So if you're looking at the business credit masterclass, you have to have a business entity in order to build business credit. So if you plan on getting an LLC or a corporation, then absolutely take the class so that once you go and start that business or that business entity, you can, kick it off the right way. All right, guys. Awesome. So, yep, that's about it for tonight. Make sure that you guys are subscribing. Oh, I'm sorry. I saw a couple more questions pop up. I think it's delayed a little bit. Have it ink. Yep. So if you are incorporated, then yes, Alex, you can absolutely take the business credit masterclass, and it can help you build business credit for your corporation. Let's see. What would you recommend for e-commerce to build on business credit? Because the net 30 sometimes don't suit us, like Uline. Okay, that's a really, really good question. So I actually get this a lot. So when it comes to business credit and the first stages of business credit, when you're starting to purchase things from those net 30 vendors. Now, if you've ever looked at Uline or Granger, you'll see that they have a bunch of, I don't say useless, but things that you're just not thinking about purchasing every day, right? Like first aid kits or pens and, toilet paper, tissue, things like that. Whiteboard markers. The first stage of building business credit, you have to view it as an investment period. You just have to view it like that, because you're going to have to make purchases and buy things that you don't necessarily have need. You don't really have a need for 50 pens, right? Or a ream of printer paper, things like that. You may not have an immediate need for it, but it's extremely important because you have to show that payment history. It's just a part of the process. So even as an e-commerce business, you have a home office, right? If you work from home or if you have an office space, you have an office space. So get some pens, get some paper towels, right? Get some Kleenex, anything. But you want to make sure that the purchases are over $50. Okay, that's really important because most vendors will not report if it's under 50. Someone says that their Nav says $397 for Equifax. So you want to check your Equifax report and see what it is that's reporting. Make sure that you don't have any negative things on your report. Hold on. Are you talking about Equifax business or personal? I'm sorry. I never missed a payment. Yeah. Are you talking about your business or your personal? Because Equifax on Nav, it'll show both business and I think it may show personal as well. So I just want to double check before I go into that answer. Okay, good question. Okay, he said business. Okay, so you said that you have never missed a payment on anything. So it could just be you may not have enough lines reporting to your business credit. So you want to make sure that you keep, it's a process. So you can't just make 1 or 2 or not even 3 payments and expect, a really good score. So it's something that you have to build up. So if there's nothing negative on your reports, then I would just make more purchases so that you can add more activity on your report and generate a better score. It says Nav has a credit card matches for me, but my LLC is only 1 month old. Is it too soon to apply for those cards? So 9 times out of 10, that's going to be a personal credit card that's kind of disguised as a business credit card. True business credit cards you're not going to have access to until you build up a really good business credit profile. But say you go to your bank or even on Nav when they have the suggestions, right? And you see these business credit cards. They're pretty much like personal credit cards. You're going to have to use your personal credit. So if you have good personal credit, it's definitely an option for you to do that, to get access to some credit lines so that you can boost your business and get the inventory or get the marketing, whatever it is that you need to really grow. Absolutely utilize that. But if you don't have the credit, the personal credit, then I would hold off on it. But it's most likely a card that's going to be reporting to your personal credit. It's not going to be a true business credit line. Okay. Did you mention something called now? Oh yeah, Mandy. Yep. So it's called nav, nav.com. The link is in the description box. Okay, the link is in the description box of the video for Nav, and you'll sign up for the Business Boost program. Okay, it's called the Business Boost program. And with the Business Boost program, and why you want to make sure that you sign up for that one, because they have many different tiers. It's about $40 a month. They will give you access to your business credit reports. They'll give you access to them to be able to see your scores, see what's reporting, see what the activity looks like every single month. But they will also report your payments to your business credit, which is really, really awesome because, you know, it's something that you need to have access to your business credit anyways. So you might as well use something that's going to be reporting to your business credit. So the link to that is in the description box of this video. And like I said, also my business credit class is in there too. It's a 2-hour masterclass going deep into, you know, getting lending, getting funding for your business and building up business credit. So if you are really interested, especially if you know, even if you're a new business, if you've been in business for a while, you can definitely benefit from that information. And remember, business credit, it's not a super fast game. So it's something that you're gonna have to continuously work on and be patient within the process. Okay. So right now I'm not doing any one-on-one consultations, but here very, very soon. So definitely make sure you guys are staying tuned. I actually have a coaching program coming up to help business owners develop their business in many different aspects. And business credit is going to be a part of this part of that process in that program. So you'll be able to work directly with me and my team. We're going to help you build business credit. We're going to help you increase your revenue. We're going to help you increase your marketing, all that good stuff. Okay, so definitely make sure that you're staying tapped in with my pages. Make sure you guys are following me on Instagram if you are not already. _Sierra Nicole is my Instagram. So make sure that you guys are following me there as well. And then I'm on Facebook. I'm really everywhere. LinkedIn. I'm on Clubhouse as well. I don't really utilize it as much as I should. I'm on Twitter too, so you can find me. So make sure you guys stay tuned because I will be announcing that program here very soon. All right, guys. I said on net 30 accounts, can you make small purchases? So as long as it's over $50, as long as it is over $50, they'll report. Okay. So you want to make sure that you're paying, I say at least, you know, $100, you know, at least maybe like make a $100 purchase, $75, as long as it's over 50, then it'll be able to report. All right, guys. Awesome. So that's all that I have for you guys tonight. I appreciate everybody who tuned in. I appreciate everyone who's going to catch the replay. Make sure you check out the links in my description box for some amazing resources for you to help you build your business credit. The summit talks about personal credit. So if you're interested in learning about that, go ahead and check that out. Make sure you hit that subscribe button if you haven't already. Again, my channel is all about entrepreneurship, business ownership, positivity, education. I've learned a lot through my few years of being a full-time entrepreneur and business owner. So my goal here is to just pour into our community of entrepreneurs because we need this information. Okay, so that is my goal. So go ahead and subscribe to my channel if that sounds like something that you are interested in. And I'm going to catch you guys on the next video. Thank you everyone for tuning in.